So today we're going to discuss another one of the advantages of incorporating your business, and that is something called a holding company. A holding company, the essence of it is that it is a company that then owns other businesses. For example, you could have a holding company that then owns a business that you have that does advertising and another business that you have that does, perhaps you're a landlord, perhaps you're renting out a location. So you can have two different businesses. Now the advantage of the holding company is twofold. One, it provides you with a structure. It allows you to keep all of your different business ventures separate. It provides a nice clean organization. The other advantage is something called the movement of cash. What happens in a business, remember we talked about in a prior video that there is legal concerns for businesses, and if you're incorporated, then only the assets in the corporation are at risk. So with a holding company, you can move cash from that operating company, your advertising company perhaps, up into a holding company. And that movement of cash is actually done at a tax-free rate. There's no taxes on it, provided you own a certain percentage of shares. Assuming in this case you own 100% of the operating company, or at least 50, you'll be able to move the cash from there up into your holding company. That way, if the advertising company is ever sued and loses, then the cash or that value is up inside of the holding company. It also allows you to move money into a different company to then invest elsewhere at that corporate tax rate of much lower than the personal rate. So as you can see, holding companies provide a few different advantages and are definitely useful once you begin taking on multiple ventures.